better future. What is that? What would you like to see in a better future, and how do we achieve that better future?
What I'd like to suggest is that the idea of long-term savings is an enabler to all the national development strategies and indeed the SDGs that we have been discussing. So allow me to reintroduce the professor that we heard from this morning, Professor Albert Makochekanwa, to come through and grace the stage as he introduces this particular session.
We have here, let's get back to long-term savings. So what I'm presenting here is a study that we did for Old Mutual, which of course benefits all of us, where we're looking at restoring confidence in long-term savings and pension contributions. So if I were to ask all of us here, don't raise your hand of course, to say how many of us have savings in our accounts, especially in ZIG. For some of us, when it just hits from your salary, the next minute is to go and swipe and just leave the bank balance. So that's where we are, and there are reasons. So anyway, especially this young man, those who recall the 2080 became a symbol of hyperinflation in Zimbabwe, where the currency by that time was just more like a paper. So you could see what he was holding in less than, so the bulk of it, but less than 100 US, if not 20 US. That was the inflation where we are saying we want to restore in terms of confidence. Then we had that gentleman again. He was one of those in papers symbol of saying, this is where we were in Zimbabwe. That's hyperinflation. We will see what that meant to us. These are cues that were by them, especially for our pensioners and some to just get their money. Because at the peak of hyperinflation, people would go this time at the bank and sleep there, trying to get the money the following morning. So that's the environment which was at that point in time. And what we are showing here, these are your $100 notes. But we are saying, even if you had whatever rate, in terms of US equivalents, as long as it was long in local currency, that amount in local currency moved from trillions, quadrillions, into few in terms of value. So that's how the situation was. So we are saying, in spite of that history, as human beings, we still have future, and we want a better future. We still need to do savings and prepare for our future in terms of our pension contributions. So, ladies and gentlemen, of course, this is one of the famous currency note in the economic history. In Germany, they were not near here. 100 trillion. So we were learning actually during that time to say what is a million, a billion, a trillion. So on the other hand, people were learning the numbering, but only see us know this is how things work. So what we are going to do here, I am going to just present in few things that we know, but there's no harm repeating things that we know, so that at least you reconfirm what you know, at least from an economist. So among others, we're analyzing in this study the impact of hyperinflation on long-term contributions. With that, these were some of the issues. What were the impact? There are many, but I will just pick a few. First of all, one of the impact was that people lost savings. People lost money. Those who had trillions and trillions on 1 February 2009, they went to less than $5 US. People lost money. That was one of the impact of the hyperinflation there. Also, secondly, people lost their pensions. They lost their pensions. Actually, there was a commission of inquiry which was put by Parliament in 2014, a commission of inquiry in terms of converting the losses of local currency into US. One of the quotation of those that were interviewed by that commission, which is in the answer, was that someone was showing a pension check of 8 cents, 8 US cents, someone who has worked for 40 years. People, in terms of hyperinflation, they lost in terms of their pension contributions. So already these two losses came ring into people's minds. When it comes to savings in Zimbabwe, what does that mean again? People also lost confidence when it comes to government policies, especially central bank policies or pronouncement, as far as money issues, as far as interest rates, as far as exchange rate is concerned. So again, that was the erosion, which was there, among others, also in terms of losses. It also contributed to the downfall or decrease in terms of economic activities because of the situation. You could not get money. The hyperinflation was also tied to shortage serious of the local currency itself and also the US dollar. So these were some of the few impacts that hyperinflation did to our economy, and that, especially the 208 one, rings into our minds that it disturbs or it results in a situation where confidence in savings and long-term savings or pension goes or vanished in our financial planning at household level. So also we found that few challenges and barriers now when it comes to people to say, why are you not savings, whether long-term or pension? There are many reasons, but of course, some of the issues that we found, and which I'm sure some of us we can attest at household level, is that because of the economic instability, people are afraid to save because they say, no, we may not be guaranteed whether when you save today, after 10 years or so, you are assured of the amount you saved in its value and also the interest. So it's one of the hurdles that we find there. We found also another challenge that the confidence in the central bank or the financial sector in its holistic is also very low. And here we are talking of rational people, me and you. Very patriotic, but we are talking of human nature because we all want to save to prepare for our future, for our kids, grandchildren, even us when we retire. But the issue is the confidence, which is because of the history that we've talked about. So another also challenge was that in terms of, again, the financial institutions, some people, or most of us were saying, if you put your 100 US in a bank today, after a month, 2 months, 6 months, when you go to check that balance, you may see it's $87. That's how Zimbabwe is. When in other jurisdictions, when you put your 100, you expect after a month or so to get whether $2 or so in terms of interest. So these are some of the challenges which I'm sure some of us, we can add more and more and more. But these are currently the challenges are on the ground in terms of why, as Zimbabweans, we are struggling to save. Of course, another challenge which is structural is that for you to save, you should have at least for today a nice meal, etc., etc. These incomes are very low. So majority of us, population may be struggling to get a meal. So savings becomes a secondary issue. So that one is structural. People may want to save, but that's what is on the ground. Also, we see that what we've done again was to see and learn from other countries. We are not the first one who have gone through hyperinflation. You have your Germany, you have your Brazil, your Argentina, how they managed to navigate. So we have some lessons that will come in terms of when we do some recommendations. Also, we have some actionable recommendation, but our goal is at the end of the day, despite everything, we have to go back to think of savings in terms of our savings. These savings are important. Why? I think Endo someone mentioned. For investment, the issue is it doesn't matter you are very rich or you are Microsoft or so. The retained profits are not enough to do serious investment. Because each year when even if you make profit, There are shareholders that want their dividends. So that's why banks are there. You have to go and borrow. Even if you're a big company, you have to go to a bank and borrow. What are you going to borrow? It's money that me and you and that have put in that bank. So that bank will have the surplus which they can borrow to company A, company B. So that's why we zero in on the importance of savings. Of course, in general, but of course, the long-term savings. Because if I put my mind to say, no, I'm buying a government bond, so not the bond not the currency, but in terms of investment, if you put your 10,000, say I'm buying a government bond for 30 years, the bank has the opportunity to use that money to borrow, to lend it to others, get interest. So that's what we are saying. We need the savings because they are the bedrock upon which investment can happen. So, ladies and gentlemen, this is just a summary to show some why we came to the conclusions and the recommendations that those in research we call it methodology. So in our case, we interviewed 3,201 throughout the country. Of course, 49.4% were women, 49.2% were male. Of course, if you had the two, they don't tally to 100%, but there are some who chose not to divulge their gender. We also did focus group discussions. We did learn some lessons from these countries. In Shona, we say, you learn from what others have done, especially those who passed through that phase. Argentina, Germany, Venezuela, Yugoslavia, Hungary, and Brazil, they are many made, but we did some case studies of these ones. So we are saying the big issue is that confidence. We want to go back to do long-term savings, and confidence is key to that. So I've already alluded to some of the issues in terms of loans, losses, in terms of barriers in storing confidence, in terms of, so now I'm going to go through the measures that are there to say, what can we do? What can we do so as a nation, as participants, whether government, private sector, or the various economic agents, so that at least we move back to saving. Because unless we do savings, the upper middle income economy by 2030 we may not reach it as soon as we want, because there will be investment serious. Because one, we cannot borrow locally if there are no savings. If we are Zimbabwean entities, it's very difficult to borrow outside because we are considered as a high-risk country because of the debt that I have shown you. Zimbabweans, we are known that when we borrow, we forget to pay. So we have internationally, we are known for that. We borrow and sometimes we forget. So now borrowing outside to invest is very difficult because of that. Then when it comes domestically, there are not enough savings. But now we are saying we need those savings at international. That's why we are reinventing. But so, ladies and gentlemen, what we have here, these are some of the things that as a country, some are policy from government point, some it's as the private sector, that we need to do to restore confidence so that we do savings, long-term and also pension contributions. While it's on pensions, I'm not sure we have NASA. Of course, our pension, I was asking someone, we have relatives, they say some they get $40, $50. It's another separate debate to say, is that enough for when I'm retired myself, I'm getting $40 a month as pension? But it's another debate. All we are saying, we need to save, we need to contribute. So one of the points for us as a country, for us to save, there is need for economic stability. Economic stability, if it's not there, then we will not go. We are not going to save, including us who are here. Yes, we are patriotic, but we are also rational. When you save, you are not saving. Yes, you can save for investors and country, but you, at the end of the day, you go back to your home with your family. So when you do your savings, you are looking for your family's future and yourself when you go old. So economic stability, which means a lot, some of the things we had the high prices or inflation, we don't have you cannot get currency in your hands. Some people, they say, now it's close to 6 months, they have not get hold of a zig in terms of a coin or notes. That's the instability that you are saying. So that we need an optimal economy where there are not those issues. Also, restoration of monetary and fiscal policy to optimal level. What are we saying on monetary? Monetary, these are things like your money supply. These are things like the currency itself. These are things like the exchange rate. All those need to be in a place where we have confidence, like in all other countries, that especially that surround us. So these are some of the inputs to restoring confident, a stable currency. In my first presentation, I mentioned what a stable currency means. I just gave an example to say, if you do a trend, just look for a graph, even Google, the exchange rate between the pound and US. You see that 1 pound is 1.2, 1.3 US for 30, 40 years. That's what we say, stable currency. And that's what we wish as an economy. But as again I presented to say, our ZIG in less than 6 months, it was introduced, 1 ZIG to 13 point something. In 27 September, 1 ZIG to 24 point something. Now, just after a month, it's 1 ZIG to 28. We are talking of official, not the other market. Again, that's not a stable currency by international standards. So I have to claim myself I'm an MPC member, but I'm saying by international standards. Ladies and gentlemen, institutional reforms. So there are many things around there, but in terms of the various laws that govern financial institutions and even opening a bank, there are some regulations which some, when it comes to savings, they say some of the regulations are just intimidating. Strong government regulation and oversight. Some of the activities in the financial sector, I think we have a history. 2004, a lot of banks were put under curatorship. Some closed. Why? Because of limited, or by then there was not there was maybe laxity in terms of oversight on financial sector. So now people are saying to have restoration of savings. We need that to be done. Otherwise, people will be skeptical about the financial sector. There is also an issue where those who have lost money, whether pension or the actual savings, there is the issue of compensation or relief for past losses. People, or we are saying as savers, we lost money. That thing cannot be just go unnoticed. So experience from other countries, those that I listed, unfortunately, no country has managed to reimburse because the idea is the quantum. If we were to put it in US dollars, how many loss? It's very difficult for every government. But what other countries have done, they've compensated that indirectly by ensuring that going forward from the hyperinflation, there is a stable economy in all the various aspects. And that helped them to regain confidence as far as savings is concerned. Also, there are issues of government, incentives to say, for you, if you save this, we can help this. Or when you save from this threshold to that threshold, we may reduce your tax. So it comes in different configurations. But the idea is that government can incentivize people to save the same with the tax incentives. They are also in that group. All these are some of the things that can help restore confidence in terms of savings, long-term savings, as well as patient savings, ensuring stability of patient funds. I'm sure again on that particular loss, there were issues that people said the 30, 40 years, but again, they lost everything. In here's the financial retailers, advice and planning. Some of the reason why some may not save, they don't see the importance of savings. So there's need of also some financial literacy why should one save and not keep his or her money under the pillow? So there is also a combination of ensuring that people, they have some financial literacy, and also the issue of higher returns on investments. If I invest my dollar, my 10,000, at the end of the day, under what period can I have a return? And not me banking, but also being penalized with lead charges, also better investment options. Well, we are still in developing countries. We don't have many, of course, we have unit trust, etc. In other countries, they have swaps, derivatives. So again, it's also an area that may contribute towards restoring our long-term savings if we have many investment opportunities. Also, ladies and gentlemen, the issue of improved trust in financial institutions. You know, beaten twice, human nature says you have to be careful. And that trust has to be earned. With due respect, this one we used to say even in MPC, that the truth is confidence has gone down because people were beaten 1 February 2009, 1 February 2019, and people lost. So that trust again needed to be regained. And all these are a plethora of some of the issues, some of the things that can help. Then also the issue of high income or salary. You only save if you have enough, at least for today. But if your income is not enough to ensure that you have a better today in terms of your food, accommodation, the basics, health, then savings may become the issue that is not important for some of us. Financial institutions, transparency and the communication, this especially when it comes to charges. Some don't just say, they say, the financial charges are even more than what we expect. Then also improved employer matching and contribution towards pension plan. Here what it means or what it implies is, for some employers, they said, you put 50% for your pension, us as the employer put 50%. Or some may say put 20, the employer put 80. So all those are encouragement that can help people to save. So I finish off with those things that are targeted to financial institutions, one of them being lower fees and costs. These are some of the things that can restore confidence in terms of savings, also better customer service and support. I'm sure some of us are well-traveled. When we go out and you use financial service today, you may see that some customer care out there, they are at a higher level compared to the customer care sometimes that we get in our financial institutions. I'm not saying all, but I just say some of our financial institutions. Better transparency, I think we've covered. Stronger performance guarantees. I was talking to someone, or someone introduced himself as a board of the Depositor Protection Commission. People want guarantees to say, should things happen, we lose. Where do we get the recourse? Or we just say it's water which is going into Dead Sea, forget about that one. So all those things are important. Then enhanced security and fraud protection. I'm sure with these cyber issues, fraud, some people are losing money, which are in their accounts, in bank accounts or their savings, because of the fraud that is happening there. So, ladies and gentlemen, my last word is let's go back to long-term savings. It's good for our nation so that we have a pool of money tailored for investors, and also it's good for our individuals, our families, so that we guarantee our future where we know that we have some funds to spare. Thank you.